US dollar slash the Polish Zloty. First off, read this disclaimer carefully. I will also in this video tell you a bit about why Forex market is such an amazing market and actually better in some aspects than stocks and bonds. Okay, let's quickly just look at the zeitgeists. Let's go here. You can see that the performance is pretty darn spectacular, but I do expect some of the biggest movers here to potentially see some pullback. But the topic today is Forex, and we will look at the US dollar slash Polish Zloty. Okay, so US dollar is the base, distance from 52-week low and high. Poland, and here you can see the GDP, Consumer Price Index change, total tax rate, and forested area. Okay, first let's look a bit at the seasonality of the pair. You can see that July is one of the absolutely weakest months for the US dollar. You know, it weakens vis-a-vis the Polish Zloty. But August, which is coming up next, that is one of the strongest months. And there is something interesting here happening with the charts. Okay, let's first go way back. So here you can see some super monster bullish tear for the dollar. Then you have major pullback, huge pullback actually for the Polish Zloty. So you can see that this is a monster pattern. Here I have put in some cycle patterns. You can see that the previous cycles have been relatively consistent. And based on these patterns, you could make the case that we are towards the late part here of this declining cycle. And something that is quite interesting is that we have, overall, since this low here in the financial crisis, the US dollar has strengthened against the Polish Zloty, usually coming back to some key support level. And we have recently done that. We have just now started to goof around the 50-week moving average. Given that July is one of the weaker months for the dollar here, we expect support to be found, and that a buying opportunity here is going to, show itself, because we did see that August was one of the stronger months. So we do have a combination here of a cycle pattern showing that we are towards the late part of the weakening of the dollar here, and we have support at the moving average, and we have seasonality favoring a strengthening of the dollar. So you could make a case here that there is a buying opportunity on the horizon. We see here, ignore some of these indicators because they become a bit of a mess when you deal with Forex, so completely ignore, the accumulation distribution. Okay, you can see here that the correlation with S&P 500 is 41-ish percent. So there is some correlation, but it is so mediocre. Well, it's so mild, I guess you could say. That's a better word. So mild that there is kind of not a correlation. At least because if you have a stronger correlation like negative -7 or positive 7 and upwards, 70%, and -70, then you have a strong correlation that you can actually base some trading decisions on. But this is in this zone where it's like, not much to conclude with. So basically, we have seen a sharp spike in the dollar, then a sharp correction. There's a good probability of a buying opportunity here. RSI is in the neutral zone, so nothing special happening there. You can see that RSI is relatively consistent historically. It doesn't like to be oversold or overbought, which means that you could use the RSI levels for a trading decision based on the history we have here. So let's go to the daily data points, see if there are some interesting moving averages and other indicators. Yes, we definitively have that. You can see here the red 200-day moving average, one of the most watched moving averages on the planet. Here, all over the place. We are now, after this correction, we are dancing around that moving average. Let's actually measure the move here. That was a 15% move. That's really big for Forex. This pullback down to this low here was 8%. And that can be really big with the leverage that you can get here in the Forex market. So you need to view those numbers in the context of Forex. Certainly seems like we're forming a base, some consolidation here. You can draw some trend lines. Let's actually draw some trend lines, like like that trend line. We can do it like this, and we can draw another line. We can do it like that. So you can see here that price action is definitively getting squeezed here, which usually resolves itself more aggressively. You can see that there is more of a bullish bias. So even though we were making lower highs, the lows are becoming higher, and they are showing more improvement than the highs are showing weakness. So there seems certainly to be some bullish bias happening, which fits into the other numbers we looked at. Okay, so to sum up my take on here on this currency pair, there is a good reason to think that there will be a buying opportunity here for the US dollar versus the Polish zloty, which means that the US dollar will strengthen vis-a-vis the Polish zloty. Maybe you are asking yourself, why should I trade the Forex market or invest in Forex? Well, here are some of the strengths of Forex market, okay? Number one, you can easily open a demo and live account. Market data is usually free, and the same goes with charting, which is very beneficial. Forex is far more liquid than bonds and stocks, which means that you can easily get in and out of positions. I mean, you need to be a monster in the market to have like a big impact. So yeah, it's not an issue. One of the things I like most about Forex is certainly that it is more for the more serious traders. It is a very mature market, so you are trading with the biggest players in the entire financial landscape. So there is far less of the goofy action that we see in like penny stocks and also to an extent in cryptos, where there is a big move and there is no explanation, it just kind of happens. And that can be very annoying, because when you do tons of research and then some mysterious factor wrecks your analysis, that is really annoying. But the Forex market, it certainly rewards insight. So the more you know, the better you will be able to trade. There is a huge variety of correlation between Forex pairs, which means that it is very easy to design market-neutral portfolios. And you can, of course, use these correlations to include some Forex pairs into your overall portfolio, where you have stocks and bonds and commodities and so on and so forth. And then you can have positions that are not strongly correlated with each other, but they all benefit from some underlying trends. Because one of the pitfalls of designing a market-neutral portfolio, that is when you basically have positions that cancel each other out, meaning you have a gain in one and loss in another. So basically you're not making progress. But if you do correlations correctly and you always are aligned with some trend, then you can have you can have them all, well, you can have most of them at least go up. You can be profitable simultaneously, and that is a very nice position to be in. Shorting and being bearish is very easy in the Forex market. You do not need to borrow. One of the big, a headache on many trading platforms, that is if you want to short like a stock, you need to pay the dividend, you need to pay some interest. I mean, it can be a bit of an ordeal, so there is a barrier of entry. But Forex, super easy. Many sophisticated Forex trading platforms out there, yes, and this ties into, this. It is made for, for very it's made for very seasoned traders, and the more seasoned traders are very critical of their trading platforms, which means that the trading platforms become better. Understanding Forex improves other trades. Yes, if you have a good understanding of the Forex market, it will inform your stock trading, your options trading, you name it. Because Forex is, the only market that is bigger than Forex is the derivatives market. It's very easy to get leverage. Hence, the move we saw in the US dollar Polish Zloty recently. That you can get up to like 500 times leverage on in the Forex market. So the move can become really, really big. Of course, leverage is a double-edged sword. It's easy to automate trading. The Forex market is open most of the week, so it's available 24/5. It closes Friday at 5 p.m. Eastern Time and opens on Sunday 5 p.m. Though central banks, as an example, they can trade Forex even when it is closed. Yeah, the Forex market is less regulated than other markets. The key thing about this is that you definitively want to be on a reputable platform. Okay, so you do not want to get into those Forex brokers that have a sketchy track record, because then you literally can get into a situation in which you have a big profit in your account, and then you want to take the money out of that account, to use it, and then you can't. So you definitively want to be only with the serious platforms. So if it sounds too good to be true, then it usually is, because there are these platforms that will have all kinds of rewards. You will get all kinds of gifts for signing up, but that sounds suspicious, and it is suspicious because it doesn't make sense. Nothing is free. Simpler tax rules in most countries. There's usually no commissions, but there is bid-ask spread, and you certainly want to watch out for how big that spread is. The market is closed now in the USA, but there is some activity in the futures. So let's look at the S&P 500 futures. Okay, you can see here that there is a little bit of a pullback today. You could make the case. Let's start playing around with the trend lines. You could make the case that we are forming some lower highs. If we draw the lows here, so we have lower highs and we have a bit of lower lows. Looking at the closes here, you could make that case. I am not a huge fan of trend lines, simply because you can draw trend lines in many ways. So let's actually illustrate that, because there's a lot of people who believe a lot in trend lines, but yeah, so that was one way to draw trend lines. So let's actually illustrate how trend lines can become very goofy. Okay, so let's draw different trend lines. I'm pretty sure you would agree that these make sense. But here is where trend lines become more complicated, because you can draw them all over the place. So let's say you start here. Here you can have a trend line. It makes sense. You can also have one, let's start here. Connect the dots like that. Here we have another trend line. Well, you could start here as well, like that, like so. Here we have another trend line. Oh, but it doesn't stop there. Oh, no, it doesn't stop there at all. So let's actually continue. You can actually make even more trend lines. Okay, well, let's change that. So you can make trend lines like here. This is a place you can make a trend line, like that. You can start making trend lines. Maybe you want to capture this channel, so you make it like that. So I think you get my point. The reason why I'm so critical of trend lines is because within just a few minutes, I have already made many trend lines. And you could make a case for all the trend lines I have made, and you could make even more trend lines. You could start, going back here, and so if we put, so this is one example, okay? So let's say you're going to do an analysis with the trend lines. It's a mess. I mean, if you look at the recent price action here, I mean, we have because right here we have broken below some trend lines, we are above some others. So what do you conclude? I mean, it's a mess. This is why I am quite skeptical of trend lines. Let's actually try to remove it, if that's possible. Trying to go back here. What a mess. Okay, like that. Let's remove the chaos. Because the problem with trend lines is that different traders can make different trend lines. But that is not the case with moving averages. So here I have the 200, 100, 50, 20, 10, and 5 day moving averages. They are the most watched moving averages, and no matter who uses them, they all look the same. Throughout the entire planet, people who put up the 50-day moving average on the S&P 500, they will see it testing here. They will see the 50-day moving average here. They see the exact same thing, which means that we are trading together and looking at the same signals. But the split second you start drawing on the chart, it gets very dicey. Okay, a little bit of a rant there, but it is an important thing, because the entire point of technical analysis is to make observations that can be informative and a bit reliable. And if you are watching something very few others are watching, then guess what? Maybe it's not going to have any impact. You are trading then in a vacuum. Okay, whatever you do, of course, don't fight the trend, and may the trend be with you.